What is up, fellow investors? 14 days ago, I started this account at $50,000, and today we are up 6.6K, which is 13%. That is amazing, and that's pretty much what you would get in a year. So we're kicking off. Um, my 1 year return is at 51%. That's almost double, not quite there. The S&P 500, which is at 30. So I have been investing into this account longer than 2 weeks, but I went public on this account 2 weeks ago and I got a massive return over the past 2 weeks. These are the positions I have in the account that I'm in. I tried to, oh, looks like I forgot this one, but I tried to mark the stocks buy, hold, and sell rating, what I would do right now. So if you're just walking in to my channel, the green is buy, things that you, or stocks that I feel very comfortable with telling you to buy it. Right now it's at all-time lows, either hated by other people, but make sure to do your research. The yellow is more of like a slight buy or hold. AMD, for example, is at its all-time high, but I expect it to be way higher within the next couple of years. So it's a slight buy. Like, you could buy it now and definitely get a return, but it is at an all-time high. So you need to make sure you're not going too risky. Whereas Amazon and Meta, Amazon at all-time highs, and Meta, Meta's close to being at all-time lows, but they both have their own problems right now. And I wouldn't 100% recommend going into those companies. But I had this here to help you guys on like the percentage I have on each stock in the portfolio. This is exactly what you'll see, or what anyone would need to look at to either copy my portfolio or to figure out like where I'm at, what I have. So the two lessons that I've learned so far, these are actually very important lessons. Listen up, because I'll save you a lot of money. For Fubo, this is more of a risk stock that I wanted to get into. And I got into it before the stock split. So I got into it at $21 per share, or a little bit higher than that. And over the past couple of weeks, I've been DCAing. I expected the stock to go down. I expected it to. I should have waited. That was like lesson number one. I should have waited for it to come down before going in, but it wasn't a guarantee. So it's better to be in the market than to like try to time the market. So I did correct on that, but I DCA'd too much. And this was really one of the first couple of stocks I put in the portfolio. And anytime I got under a 20%, or negative 20%, I would try to add more to where it would come back up to 15. So I was DCAing down, but I ended up DCAing way too aggressively. And I have 3,000 here, which is around 3.5% of the portfolio. But for a risky stock, I don't want it to be over 5% ever. 3.5% is kind of high for a very risky stock like Fubo. And now I can't DCA into it more without feeling uncomfortable with overweighting that stock. So like the lesson that I've learned is don't aggressively buy too fast. It's perfectly fine to DCA into a position, but now that I have pretty much a full position built out, I can't feel comfortable adding more to it, even though it's at a good deal right now, or it would be at a good deal. So don't DCA too fast. It's okay to kind of wait a little bit and add at a time. And AMD is my next lesson. I learned that it is best to get in a stock before it hypes up. I know, amazing, right? I knew that AMD was going to shoot up to the moon based off of the news that they were putting out over the past couple of years. I do regret not putting a little more into it, but once again, I didn't want to overweight. So there will be stocks that you look at, like AMD, that are not in the best position last year, and they have a solid plan for growth in the future, and I was extremely confident in it and still am. I should have added more before it just took off. But those are the two main lessons I've learned. And I hope that you've learned something as well with that. This is the projections that I have for this year. Hopefully, I started at 50K. Hopefully, by the end of the year, I can get all the way up to around 80K. This is at a 25% return, and I will be adding $1,200 a month, which is $300 a week. I add $300 every Friday, which should be doable for everybody. I have an average job. I don't have like crazy salary. So everyone should be able to do about that much. And the only thing that I am averaging way above everyone else is my estimated returns. I'm already like over the past, I think over the 1 year, I'm already at like 8% right now. So if the market does well, I should be able to get to around 25. If the market doesn't do well, I'll be much lower, obviously. So, but my goal is around 75 to 80K by the end of the year. And over the past 2 weeks, I have DCA'd into these stocks: Fubo, Salesforce, ServiceNow, Elf, Nike, and Celsius. Those positions, if I go back, were all negative on my final return so far. So I have been DCing down. Those I don't mind adding more to. And I ended up selling Meta. So I didn't sell all of my position in Meta, but I did sell probably 40% of it. So a decent chunk. I don't think that Meta as a stock is going to continue to do very, very well in the short term. The way that Mark Zuckerberg is spending is a little aggressive, and that happened back in somewhere like 2022-ish, a couple years ago when the stock reached $80. So I'm not saying it's going to reach $80 again, but I do not expect it to perform very well if the CapEx is just continuing to hire for no apparent reason. So watch out for Meta. It will, in one day, a couple months from now, will have a massive opportunity, and I expect to load the boat on some of that whenever we figure out why and what they're spending on. But as of now, I'm kind of staying out of that stock until we get some more information or it travels lower. And two goals that I have is to get my cash reserves up to 5%. Right now I'm sitting at 1.6. That's actually extremely low. A lot of people are at like 10, 20%. I don't have much to work with, and I like being aggressive. But I want to get that above 5% before I start making other investments. And number two, I want to get more dividend income. I have some now. Two of the best ones I have in this portfolio is Cheesecake. They have a really good one, and Nike is trading at a very good deal right now and has a good dividend, in my opinion. So I need to add more dividend into my portfolio to have more solid returns throughout the year. Here is the dividend income that I'm receiving yearly. It is at $320, and I calculated it. If I was working a job at that, I would be getting 15 cents per hour. So we got to start somewhere, right? Next year, hopefully I can get to like 30 cents per hour, or half a dollar per hour. And all you do to pretty much calculate that is take your total and then divide it by 2050 or 2080, one of those numbers. And that's the average amount of hours you work per year, and you'll have a salary. So we are far off from our final goal of being able to live off of dividends while investing in growth. But we have to start somewhere, and we are making some we're making some very good progress. And hopefully we can continue to make good progress. So that was the 2-week update. We have gained 13%. I want to thank all of you guys for watching. If you would, please get a thumbs up and continue watching with me, continue growing with me, and I'll see you next time.